recording. So we're going to keep going with inventory, and we're going to do some Excel, something called vertical lookup and hiding columns and some other things. But the inventory should be more of a review. And I'm going to go ahead and share my screen and take a look at let's mark for sound. I'll turn that on. Okay. Portion of screen, share sound, optimize, and we're in. And let's go ahead over to our Ben and Boz, and we're going to talk about inventory.
Welcome everybody to the Ben and Boz narrated PowerPoint series. We are up to lesson 6, inventory and cost of goods sold. I'm Boz.
I'm Ben.
How are you doing today, man?
I'm feeling good. We are cruising through these things.
Sometimes it feels like it, sometimes it doesn't.
Well, no, they're a lot of work to put together, so now it's game day.
This is the fun time when we actually get to record them. That's right. All the dirty work is done. All right, man, we're going to start with an example today.
I love doing that.
Yeah, the example we're going to get into is that cost of goods sold and inventory are huge numbers for many companies. And let's look at the biggest company, which is?
Walmart.
Good guess, man.
Oh, I had a slide for it. So
we've gone through
We're just told them how much work we do to prepare for these things. And so
you did know that. But Walmart, we've got their income statement, we've got their balance sheet. But let's highlight on the income statement their cost of sales. Now, is that $373,000?
Well, no, as you can see there, it's in millions. So that's 373. We'd have to add 6 zeros to that. $373
billion.
Wow. We didn't even practice that timing. Look at that. We're just getting in the sync of this thing. Just wait till lesson 12.
That's true. That's true. And then over here on the inventory side, $43 billion worth of inventories out of a couple $100 billion of total assets. So
I would say they probably care about how those values are reported on their financial statements just because they are so large.
Very, very big. So speaking of kind of these values, I kind of quizzed you on this, and obviously we've prepped this out, but I've got the Fortune 500 is a list produced by Fortune magazine. It's largely public companies, and it lists them by revenues.
Isn't it only public companies?
No, it's actually, if you've got private companies on there that have to disclose their information. I learned this last year, so there's a few private companies on there. Cool. But we digress.
We do.
That's
on
right.
point.
On point. So these are the biggest 10 public companies in America, at least in terms of revenues. And I made Ben guess. I said, which of these 10 companies are going to have higher compared to lower inventories, kind of as a percentage of sales? We obviously know Walmart, they have twice as many revenues as the next person. They probably are going to have the highest inventories, but more as a percentage of sales.
Now you'll notice here, they're doing inventory as a percentage of sales revenue. When we did the analysis last class, we did inventory as a percentage of assets. So we did what's called a vertical analysis, and how much of our balance sheet is inventory was what we calculated. But here they're calculating inventory as a percent of revenue, just as a different kind of reference point.
Which ones did you kind of think were going to be the highest and the lowest and so forth?
So when I was going through, I was looking at mostly the retailers. That would be the biggest one, lower margins, right? Higher inventory that they need on hand relative to their sales at any given time. And so I actually had CVS as my number one. Drugstores, yeah, followed by Exxon and Walmart. I know Exxon doesn't fit that retailer profile, but I took a guess. I was wrong.
Yep.
But I took
oil and gas, yeah. So.
But do you want to show them what it was?
Yeah, sure. And on the low side, who did you think wouldn't have very much?
I was thinking service companies. Okay. So looking at that, let's United Health Group, health insurance, right? It's not going to be anything.
Yep.
ACTG, maybe they sell some phones, but mostly it's the service plans that they're selling. So those were towards the bottom, and then the rest kind of just squeeze in the middle, as I guess.
So that was your prediction, and now we'll show it. Well, Walmart's $43 billion of inventory. We showed that on the previous slide. It's 8.8% of sales. ExxonMobil, we're going to focus on that final column, 7% of sales. So that was pretty high.
Number 5.
Berkshire Hathaway, that's Warren Buffett's group right there. So 6.7% of sales.
And that's a tough one because they're technically an insurance company, but they take all those premiums, invest in other companies.
Well, they got their foundations and insurance. They own like everything.
Exactly. That's what they take everything.
They've had big shares in a lot of non-insurance companies as well. Coca-Cola is one of the big ones. Yep, definitely.
That's what drives up the inventory as a percentage of sales.
Yep, exactly. Now Apple, down all the way down to only 2% of sales. So you think of like iTunes, right, as an example, and they just don't need a lot of inventory for iTunes.
iCloud,
iCloud
service they provide.
iPhones, there is an inventory cost with that, but it's just not going to be as big as compared to sales.
It's a pretty high margin on their phone, so inventory low relative to that.
UHG you said was going to be low, and let's see if Ben is right. 0.
And that's another insurer, right? Berkshire Hathaway is more property and casualty, but United is health insurance. They don't have those extra investments in Berkshire.
Yeah, so they're all services. McKesson, they're more health products, so that's why they actually have a pretty significant inventory percentage there. CVS, I suppose, you look at those shelves, right? You walk into a CVS, those shelves are stocked.
Not just a pharmacy. They got a lot of retail goods as well.
Yep. CVS, Amazon, Walgreens. Also pretty high. Low margins,
Low margins, high turnover.
Yep. AT&T, you predicted them to be low, and they were low, Ben. Congratulations, man.
Yes, woohoo.
So, yeah.
That's a victory. I'll take it.
Yeah, the cell phone plans, right? They don't need inventory on those. And then General Motors, I probably would have picked General Motors a little higher than that. That's maybe one of the ones that surprised me that was behind a few others. But I don't know. That's why you do it. You just learn a little bit.
Yeah, trying to build up your general knowledge base here. Now that.
Yeah, but the manufacturers and retailers are generally what we're seeing that are having the higher inventory levels. So
service companies on the low end then.
Yep, definitely. All right. Well, let's get into some nitty gritty a little bit. So the overview here.
The good stuff, you mean?
Well, I don't know.
Let's break out the good stuff.
But the students always tell us they want real world examples, so they'd probably like slides just like that last one the whole time. But you got to teach some nitty gritties. How do we get that information on those slides, right? So an overview, we're going to get into some definitions related to inventories. We're going to talk about the three main inventory costing methods, the impact on the financials, and then also understand the rationale behind why you select one inventory costing method versus another.
I'm excited for that last one.
The rationale.
Yeah, it's the who cares question,
That's
right?
Well,
We
if
can
you're
put all the
excited,
stuff on paper.
when
So
it comes there, if I start to talk about it, make sure you interrupt me. So you take that.
hey, as a teaser, everyone, we got a tax slide coming up. That's going to be for us.
You don't take that one, man.
I'm going to try and take it now just to see what happens with it.
Yeah, good luck. Good luck. All right, so definitions. When I think inventory, I just think stuff a company holds it's going to sell, right? A little bit more formally, goods, products owned by a company held for sale.
Hey, you got it right.
Yeah.
Way to go, boss.
That's right.
Assets,
Merchandisers, when I think of a merchandiser, those are companies that are going to buy and sell finished products. So examples of those, Ben, of like real life companies?
Walmart, Target, Best Buy. This would be
Amazon.
Yeah,
So
our honeybee business. My wife and I, we're a manufacturer, right? We produce the lip balm, the hand lotion bars, any of the wax products. Then we sell those to Coborn's or whoever in the area.
Yep.
And
Coborn's.
that's the
Yep. Local
merchandise.
grocery store right here. So
Oh, I forgot. We're going
merchandiser.
international with these videos.
Well, we are, but that's why we just say local grocery store. They can identify it with their own local grocery
Maybe
store.
Coborn's will pay us.
maybe. I'd
Don't
like
know.
some. I don't know. What would I want from a grocery store? I want free bacon.
I want a nacho cheese Doritos.
Nacho cheese Doritos. All right.
For life.
That's for life. Wow. So merchandise inventory. That's the name that's given to the inventory for the merchandisers. And then we have manufacturers. Those are the companies that are going to produce the goods. So when you think of manufacturers, Ben, examples of those.
General Mills is the biggest one that pops up.
That's a Minneapolis headquartered company that makes cereal. So take
Cereal,
grains and-
granola bars, soups, getting into their healthy snacks, dog food now, or pet food, I should say.
Wow.
Yeah,
Well,
a lot of manufacturing there.
So General Mills, General Motors, one of the big 10 companies, so car company. that
Kellogg.
way. Yep, Kellogg's. So
Ford,
Ford.
Tesla.
We can just keep going on and on.
I think they get the idea, though, right?
Pepsi, they make your Doritos.
But
so
yeah,
if you want.
I appreciate that.
Yeah.
Frito-Lay's.
Totally. So, we were going to say something?
Well, yeah, I was going to transition
You're
out
gonna
of
say,
manufacturers
move
and say
on.
it's not as easy as merchandisers who can
No.
just buy the finished good and sell it. Not to say that merchandise is an easy business, but
manufacturers,
manufacturers,
so.
they have to purchase the raw materials, then they put them into work in process, meaning you buy, say if you're General Mills, you buy the grain from farmers, you add in all the ingredients together, that's the raw materials that are going to be processed, you have some labor involved in the process to do the mixing itself, and then you got to cover your overhead. So there's a few more costs involved that really in more of like a managerial.
And I do want to mention, if you look at the raw materials, we have raw materials, work in process, and finished goods. Raw materials are processed to get to work in process, but you'll notice they're also including labor and overhead. Now that's more managerial accounting, and these guys will mention this shortly, but I wanted to point that out because it feels kind of strange including labor as an asset. You say, isn't labor an expense? It does not show up in the income statement. How are we getting it on the balance sheet and putting it in inventory? But that's exactly what we're doing. We're inventorying labor until we sell it, so we get that proper matching. So we're actually going to move some of the wage expenses that might have gone in inventory and move them up into that might have gone on the income statement as wage expense, move them into inventory, and then when we sell the goods, when GM sells the vehicles to their dealers network, and then the dealers sell it to you, what's going to happen is that inventory, including overhead and labor, is going to be expensed as cost of goods sold at that time. So food for thought. Wanted to bring that to your attention.
Type accounting course.
The next
You'll
course,
get into
yeah,
that.
yeah. This is kind of the intro accounting course. In the second accounting course, you see that. The focus of this course is more merchandisers. But all right, well, inventory flows. When we think about that, inventory is debited when it is purchased, and then usually the credit goes to cash or accounts payable. So again, debit to inventory, credit to cash or accounts payable.
That's nice. The journal entries, as we'll see, journal entries aren't the most difficult part of this chapter. It's more about trying to find what
Exactly.
type of inventory costing method we're going to use. That's where it gets a little complicated.
Good point. So if you hate journal entries, this is the only slide where we really get into them. So if you hate journal entries, don't tune out. So
Stick with us.
Stick with us.
In this
So,
episode.
That's right. And then when your inventory is sold, you credit the inventory. The debit is usually to a cost of goods sold then. So again, debit to cost of goods sold, credit to inventory. Those are pretty much the two journal entries that we have in this chapter. So
Not too bad.
No,
Are
not
they
bad.
always going to be for $100?
Always.
All right.
Okay, maybe
Good to
not.
know. Good to know.
Yeah. So inventory systems. I don't know. Do you want to say anything about perpetual versus periodic?
I do. So we have
You
two
do?
main types of inventory systems, perpetual and periodic. So perpetual, these are the ones that these big companies, usually merchandisers, high turnover type businesses, usually use perpetual inventory systems because that allows them to know every single time a sale is made, automatically updates the inventory system. So these are called point of sale POS systems. Again, grocery stores is really what I think of for perpetual. They need to know what goods are leaving the shelf so they can restock. They don't run out and lose out on potential sales.
Do they ever need to count their inventory then if it's always up to date?
I feel like they still occur at least once per year to compare expected and actual levels. Don't you think?
I think they probably should. So
It's right there in the slide. What do you know?
It is. It's a shocker, right?
Yeah, so-
why could they be different? I mean, you were an auditor, so I mean, I think you've actually done some inventory counts. I was a tax guy, so I didn't. But why would you, if you have this perpetual up-to-date inventory system, why did you guys have to go out and count it?
A few different reasons. The most obvious one you think of is called shrinkage, where people tend to steal things from inventory. That happens, but other items also happen probably more often where, say we're doing General Mills and they are driving through with the forklift and they accidentally hit a bunch of boxes of cereal. Things get broken in the warehouses or goods go bad and they spoil, right? Where things happen, but maybe that's not communicated to people that are recording. So it's not going to run through every time a sale is made, but they have some other adjustments for that.
Yeah.
Also, sometimes things get lost, right? You're talking about multi-billion-dollar companies moving things from warehouses all the time. So
Yep.
Yeah, it
And
happens.
we got to record inventory accurately on the balance sheet. So if we think our inventory is $100, but we go through and count it and it's only 95, we got to show that adjustment to get down to 95 to report our financial statements accurately. So now the periodic system, the next one, go ahead on this one.
Yeah, so periodic then, it basically only relies on the inventory counts to know what your ending inventory is. You don't worry about tracking every single sale, reducing your inventory. You would think, hey, with technology systems, perpetual is, much easier, much more accurate, real-time information, and that's absolutely true. But perpetual is also kind of expensive. So for smaller businesses like the Honeybee business or Baz's selling his books, it just makes more sense for us to do a periodic
I don't update
system.
it online every time. So we've got to do our counts to figure out what our inventory is. So
There we go.
Totally.
Perpetual versus periodic.
Yeah. So inventory and the cost of goods sold formula here. This is just a critical formula. Remember, nothing too exciting, but it's just you take your beginning inventory, you add.
What do you mean nothing too exciting?
It's just there's no numbers on here.
This is exciting.
This is exciting.
This
More
is
exciting when
exciting.
we add numbers. I'm glad you get excited about this. But add in the purchases.
Once you know this, you can add in any numbers anywhere. You're good.
That's a great point.
I'm going to stop cutting you off. You go ahead and do your boring explanation. That's
That's
fine.
my boring explanation. Equals goods available for sale. Minus ending inventory equals cost of goods sold.
Hey, that's what you get in other PowerPoint series.
That's right. That's right. All right. So, but this framework we're
Seen
going to
this
be using
before.
throughout the next much more entertaining slides. I mean, this is straightforward, but inventory can be computed many different ways. So the inventory methods. So GAAP, generally accepted accounting principles, that requires that a company choose and stick to an inventory valuation or costing method. So there's should we call them the big three methods?
The big three.
The big three.
And then plus one.
Plus one, big three plus one. So FIFO, first in, first out. LIFO, last in, first out. Weighted average, those are probably the three most common, and then we're going to see a less common one, specific identification.
Hey, that's a nice little gap on the slide there to kind of make it stand out, don't you think?
Ben put that gap in there. I created the slides. Ben put the gap. He wants to point that out.
Creative genius at work.
Creative. You don't hear that with a CPA too often.
Yeah,
Or if you do,
that
it's usually a
genius-
bad thing.
If it was that
So-
genius, you wouldn't have to tell people about it.
Good review.
That's
It's
good.
probably not.
That's
What we've
good.
talked about
All right, so
before.
what we're going to work with here, we need a base set of facts. All right, so we're going to say that we have a company that starts with 100 units and it paid $20 per unit, so they have $2,000 worth of units at the start of the year. They purchase some goods. They purchase 110 units at $21 a unit, so that stock of goods is $2,310. They make another purchase of 120 units at $22 a unit, so that clump of goods is $2,640. And then we would refer to that as they have goods available for sale of 330 units. The total is $6,950.
And you can see our formula at work on the left side where we start with beginning, plus the purchases gives us our goods available for
Yeah,
sale.
and an important thing, I mean, a company never has all these at one point in time. They purchase and sell throughout the year, but this is, you'll kind of see the framework and the model of how it works. And then we look and we see that this sample company sold 200 units at $40 a unit, so their sales were 8,000. So what we know is that this company had 130 units in ending inventory. And just to repeat on that, it's not like they accumulated 330 and then sold 200 to get down to the 130. These were kind of all coming and going throughout the year.
Did you forget to do ending inventory per unit in dollars, Buzz?
Oh, there's a gap there, isn't there? Do you think I forgot it?
Yes.
Yes, you
Yes,
think
I do.
forgot
Not to
it.
throw you under the bus
That's
here, but I
right.
think you forgot it.
I actually did not forget it. And the reason I didn't put it in there is because we have to figure out how to compute that using one of our three main inventory costing methods.
Oh.
Yeah, so let's go to that first one and compute what is that $130 worth. So the first part here is the same base facts that we just had. And we're going to say that we have ending inventory of 130 units, but here we're using first in, first out. So when we look at that one, that means that the beginning 100 units, we're just assuming that those are the first that are sold.
First
All right?
sold.
You say assuming. So
Yeah, good point.
this isn't like the actual physical flow of goods. A typical company, it probably would be those first 100 in are the first ones that they get rid of just so things aren't sitting on the shelves and spoiling and everything like that. And so, but when we're looking at FIFO and LIFO and weighted average, we're just doing the accounting side. This is not
point.
the physical flow of goods.
Yep, it's all just accounting, not physical, not reality here. So we have ending inventory of 130 units. And we're saying if first in is first out, that means the last stuff is still sitting in ending inventory. So we got to account for these 130 units. So we go to kind of the last purchase. So we take the 120 from our last purchase at $22 a unit. And then we add in the 10, we add in 10 more units because we got to get to 130. So now we go to kind of our previous tranche. We take 10 of these 100 tranche. So before I used clump, that's tranche is a much better word than clump.
Yes.
So
Technical.
That's right. So 10 comes from this, the purchase one tranche at $21 a unit. So what we're going to say is that our ending inventory is 130 units, $2,850. And then we subtract off in our cost of goods sold. Well, we knew we sold 200 units, but here's how we compute it: $4,100. That's the $6,950 minus the $2,850. That's what gives us the $4,100.
So just to repeat that or emphasize that, you remember our formula. We went in and said, okay, we've got our beginning inventory. We add our purchases. And we have goods available for sale. Now, the total here was $6,950 goods available for sale. If we subtract our ending inventory, we get our cost of goods sold. Okay, again, that was in the previous slides, and we've seen this before. You could have validated that cost of goods sold, though, by specifically looking at these 200 units that are found and say, okay, if I've got 130, I get, let's see, first in, first out. I sold these first. I sold these first. That's my inventory. So my inventory is from this layer and part from this layer. And then my actual cost of goods sold, what I sold, I had 100 from here, and I had 100 from here because I only had 10 I used before. So my 200 units are made up of 100 of the 21 and 100 of the 20 to get to the 4,100. But we didn't have to do that. We could just take these ending numbers to calculate our cost of goods sold. But it's not a bad idea to validate or verify to see that the cost of goods sold comes true. So I just want to point that out. Again, make that crystal clear of where we're at. All right, let's continue onward.
All right.
You'd asked me why I didn't, I could have, actually computed the 200 first, basically first in, first out. Okay, well, we sold, these 100 and then we sold 100 of these. And I could have computed cost of goods sold actually by tranche and then backed into ending inventory. Ben said, why didn't you do that? The answer that I gave is normally a company is not just going to have kind of 3 tranches here. They're going to have a lot of different purchases throughout the year, and the ending inventory is actually going to be pretty small compared to actually the number of sales that they had. So real life scenario, it's more efficient to compute the ending inventory as compared to compute what you actually sold.
Can we set up a computer program to do this for us?
Gosh, I would hope we would. So
tune into our Excel video series to see how that works.
That's right. We have one coming. So LIFO, do you want to talk
I
about
was gonna
this
say,
one?
can I take LIFO?
Yes, please.
All right. So on the LIFO system, we're in the last one in is the first one out, meaning that purchase number 2 that you see right over here for 120. When we make our sale in the next little bit here, next part of the slide, clump of the slide, you might say.
Grouping.
The next grouping on the slide, when we make our sale, that 120 is going to be the one that goes away first. So when we use a LIFO method and we have ending inventory of 130, we're going to say our oldest units, those are the ones that we have on hand. So we're going to take 100 from the beginning at $20 per unit. And then to get to my 130 minus 100 means 30 more units to go. So we have 30 units from purchase 1 at $21 per unit left over. And if we add that together, you can see we've accounted for all of our 130 units right here. And our ending inventory value is 2,630. And that is more of our older stuff. Again, not actual older stuff, not just moldy cheese sitting on the shelves. It's just for accounting purposes, we say the older ones are still in our ending inventory.
Yep, exactly.
So then cost of goods sold, same method as before. Take our goods available. Remember, goods available is the same in all of these scenarios that we're doing. Goods available minus our ending to get us cost of goods sold of 4,320.
All right, now we go on to the next method, weighted average. Again, your top part of your slide here is exactly the same. But what you do here is you need to come up with the weighted average price per unit of what you paid for them. And we don't do a simple average, all right? So we don't just look at the 3 of these and say the average is 21. That's why I created a different number of units, if you're wondering that. So
Wouldn't that be nice if we just say, our average cost is 21 bucks. But if you look at this, I've got 120 units at the higher price and 100 at the lower, and then the 110 in the middle. Our cost is going to be over $21. It's weighted closer to the 120 than it is to the 100. So it's going to be more than 21 as an average cost, likely rather than less than 21. So we're more heavily weighted at the more expensive units. And we'll see how that calculates when they do the average.
because it made it work from a weighted average standpoint.
You know, I wasn't wondering, but
Yep.
I trust you.
That's right. So, and I mean, so when we do a weighted average, we have more units at the higher price, so we know it's going to be a little bit more than $21 a unit. So we do goods available for sale in dollars, the $69.50. Goods available for sale in units, the $330. And now we have $21 and 6.0606 cents.
That's a great number, boss. That's
You wondering why I did that?
a little bit, yeah.
Yeah. It's so that when we do the numbers down below it all ties out as opposed to having some rounding issues.
No
So
rounding.
that's why I did that.
That's a smart move.
Yeah, well,
Did you do mental
you know what
math?
would have been really smart is to actually have just come up with an example where it didn't round off so oddly. But I had these slides
I wasn't
done.
going to be critical.
We're going
or
to be
anything
critical,
like that,
not
but,
this time. So.
yeah, not when we're live.
That's right. That's right. So I tried to do the numbers below without going to the final 06, and then they didn't add up. So, but anyway, ending inventory. This one's easy. This one should be the easiest. You just do this computation. Ending inventory, because we sold 200, we have 130 in ending inventory. Multiply it by the 210606. There's your ending inventory in dollars. Cost of goods sold. We sold 200 units. Multiply it by the 210606. There is your cost of goods sold in dollars.
You know, Boz, I've been following pretty closely, given that I'm a part of this. It feels right now like we're just spitting out numbers.
Yeah. So it's almost like you want to tie it together and
some
summarize
sort of
it somehow.
Summary. I need a summary.
Let's go to the summary slide.
Oh, nice.
Woo!
Bonus. I like that.
That's right. You were excited. You want to take this one?
Yeah, sure. Why not? This is the kind of why do we care, right? It brings it all together piece of it. And so the first line we have here is sales. And so sales under every method is going to be the same. Nothing has changed, right? We've always sold, I think it's 200 units and
Yeah, 40 bucks a unit.
40 bucks a unit, gotten $8,000 for it. Next up, you can see cost of goods sold. That is where we are seeing the differences. FIFO has our lowest cost of goods sold because we're selling the oldest goods and our prices were the lowest. Back in the day, that usually happens. So they have the lowest cost of goods sold. LIFO is the opposite. We're selling the most recent goods. The most recent ones were the expensive ones. So LIFO has the highest cost of goods sold, and weighted average, like you'd expect, is in the middle because it's a balance between the two. When you're working through these, always check. Make sure weighted average is in fact in between FIFO and LIFO, and if it's not, then probably something's messed
Kind
up
of a good
somewhere
check
along
figure,
the way.
basically. I was going to say that, and I was pretty proud of myself, and then you stole it.
Oh,
So it's okay.
You're impressive, boss. You're good.
You'll pat my back. Thank you. So, yeah, that was a good pat. Anyway. Go ahead.
So then obviously that rolls into gross margin and ending inventory. And so FIFO has our highest ending inventory. LIFO is the lowest, which would make sense when you consider cost of goods sold and ending inventory. And weighted average, like you would think, is right in the middle.
Yeah. So an important note here. So a company just has to choose one of these. Okay, a company makes a choice and it generally has to stick with it. I mean, it can change it, but that's beyond the scope of this course. And this choice will result in financial statements looking different. But this is so critical to understand. This does not affect the economic value of the company. Again, accounting profits are not equal to economic value. The economic value is going to be the same under each approach. Under each approach, the company is going to have sold $8,000 worth of goods. We assume they sold them for cash. That's $8,000 of cash that they're going to have received. And under each approach, they're going to have 130 units on hand. And those units on hand are worth whatever customers will pay for them at the time. This is just an accounting value. This does not mean if you use FIFO that your units are worth more. All right, so your units are worth whatever your customers will pay for them, regardless of how your accounting has worked for them. So that's a tough concept.
It is a tough concept. And in a little bit later slide, we're going to get back into it to talk about what type of companies would prefer FIFO versus LIFO and bring in the tax consideration of everything too. So stay tuned. We're going to get to it. I don't want to jump the gun.
It's kind of like if you bought 2 bottles of water, and maybe one of them you got as part of a big pack of water at Costco. They cost like 7.5 cents a piece if you get them in a big pack. And then maybe another one you bought them at a gas station for $1. All right, so you got one bottle of water that cost you 7.5 cents, another that cost you $1. The reality is you have one bottle of water. All right.
We have
one
two
is
bottles of water.
Well, okay. You have 2 bottles of water. One of them is not more valuable than the other, right? Wouldn't be like I'd say, hey, Ben, do you want to buy one of these bottles of water? The price you would pay me is not dictated by how much I paid for them, right? So anyway, we go on to the next slide. Trends. When inventory prices are rising, FIFO is going to have the highest inventory, lowest COGS, and highest gross margin.
So you look the best.
You look the best under FIFO. Yep, definitely. So high inventory equals high margins. And then when prices are decreasing, LIFO is going to, as Ben would say, look the best.
Yeah, on paper, you want that higher gross margin, which everything else held constant, that's going to trickle down into a higher earnings per share, which a lot of investors will look into and track over time, as you'll learn in lesson 12.
Yep. So we go on. And so specific identification, we want to talk about this method for a moment.
So this is just our slightly different method. It is used, but it's not, I guess, as common. So
only in selected industries.
Yeah, very specific products. When we think of some examples of selected industries, jewelers, where you have like diamonds, for example, 5 C's, right? On your diamonds are going to have very different values for each one. So each ring that you're selling or necklace or whatever is going to have a very different value.
You just said 5 C's. Half of our audience is college guys who have no idea what that is.
Gentlemen, let me go ahead and educate you. 5 C's.
Clarity and something else.
something else. It's something else. Yeah.
Something else.
Cut carrot and clarity. I was hoping you'd pick
That's
up the other
real
ones.
estate, so.
All right. Construction companies, right? Think if you're building a home or any sort of building, it's going to be different, right? Probably have its own specific product. Any really custom product company is going to maybe use specific identification. So just as a little example here, jeweler has 3 rings. One costs $2,000, one costs $3,500, one costs $5,200, and they sell the ring for $3,500. We're not going to use like a FIFO, LIFO weighted average method here. We're just going to pick, oh, that was the ring that cost $3,500. So they're going to debit cost of goods sold and credit inventory.
And technically, maybe they could try to use FIFO or LIFO, but I think the users of the financials would just say, "Come on, that doesn't make sense." You can really use specific identification here, and we can go on to lower of cost or market. This is a little bit more of an advanced topic, so we'll hit this one a little more quickly. But if your inventory has declined in value, you may need to what we refer to it as is write it down.
It's usually not a good thing.
No, you don't like your inventory to decline in value. So companies should record the inventory at the lower of what they paid for it, and that's what we normally do.
That's like the default. Don't change that.
Yep. Or what's called the net realizable value. Selling price less cost to sell. For this video, it's just what it's declined in value to.
Basically, if you're not going to be able to recover the cost that you paid for it, then you need to write it down.
Exactly. So Best Buy purchases a model of TVs from Sony for $500 a piece. Maybe a year later, they still have those TVs on hand, but they could only sell them for $400 because no one wants old model TVs anymore. In that situation, the net realizable value is only $400. They paid $500. They've got to write down those 100 TVs by $100 a piece. So they've got to do a $10,000 write down, and then here is the journal entry. It's kind of the same journal entry as like when you sold the stuff, but here you're just writing it down instead.
Yeah, so basically companies are forced to take more expense right away as a result of a write down, which they're never going to be super excited to do.
Exactly. So, sometimes, Ben, we go every other slide to keep each other
I'm
fresh.
going to go ahead and take Div's next
You
slide.
are not going to take the
Div's
next slide because the next slide is tax considerations.
I just want to hammer through this one, move on to the next. But
That's right. So I am a tax guy.
keep in mind the timing of this one. We don't have an hour.
We
so,
have 1 more hour to go. So
on this slide.
That's right. So companies can choose different accounting methods actually for tax purposes as compared to book purposes. So some companies will use FIFO for both books and tax. You can choose something different for tax actually, subject to some limitations. So in a period of inflation, companies would show lower profits and pay less in taxes by using LIFO for tax. So a lot of companies, assuming they're in industries that have inflation, they do want to use LIFO for tax. The limitation is that if you use LIFO for tax, you've also got to use it for books. So what that does then is a public company would say, well, I like a low tax bill, but I also like high financial statement profits. But you can't have both. In a period of inflation, you cannot, what you would love to do is choose FIFO for books and LIFO for tax. You cannot do that. They don't allow you to do it. So you got to choose whether to keep profits low, which will give you a low tax bill, or keep financial statement profits high, which will give you then a higher tax bill. Private companies, if they don't issue financial statements, then they'll often choose LIFO because you'll get a lower tax bill. You get some tax benefits. So are we all done with the presentation?
Bonus slide! All right, so
It's
this
like
one.
the lamest bonus slide ever. So.
Whoa, it's not a lame bonus slide. So this brings back to the real world examples. Why do you care? Companies, if they do end up using LIFO, they have to disclose what's called the LIFO reserve. And so this is saying if you would have used FIFO, what would your inventory have been? So this helps with comparability of companies. If analysts want to look at it, look at the differences. You could, in theory, do a partial adjustment on your income statement as well, where cost of goods sold would have been different. And it's not just in 1 year cost of goods sold would have been different, but over time, this LIFO reserve accumulates. And so here we have General Mills.
Did you still work on that account? Because you knew this one. You told me when I was prepping these slides to find General Mills.
So not only did I audit General Mills, I audited inventory on General Mills. So,
Whoa.
yeah, man, I've been counting Cheerios in Buffalo, New York, counting
Really?
Gushers in Cedar Rapids, Iowa.
I don't know what a Gusher is. But
Really?
Yeah.
It's the greatest fruit snack of all time.
Ooh, let's get some. I'm hungry. It's dinner time.
Highly recommend it. All right, so they report an inventory of $1.6 billion in 2018, billion with a B. Then in their footnotes, so the notes of the financial statements, they show you how they came up with that 1.6 billion. And so they had raw materials, finished goods, some grain, and then this little piece right here, excess of FIFO over LIFO. Basically, if they had used FIFO, they would have bumped up their inventory cost by $213 million.
It's a pretty advanced topic overall, but this is a little teaser. If you go forward to the accounting, you'll dig into this one a little bit more.
If you go and audit General Mills, you know what's happening.
Absolutely. All right, key takeaways from this one. We're going to wrap it up here. So inventory, you debit it when you purchase it. You credit it when you sell it. COGS is debited when the inventory is sold. The main inventory costing methods, FIFO, LIFO, and weighted average. Under periods of inflation, FIFO is going to give you the lowest cost of goods sold and therefore the highest profit, also the highest tax bill. Your choice of your inventory method, it does not conform to the actual flow of goods, and it also should not affect the value of the company. So, but we have to choose how to report our inventory and our cost of goods sold. Any parting words, Ben, as we say goodbye today?
No. Thanks for tuning in.
Thanks for tuning in.
I think you're muted.
Oh, you can't hear me. Got to unmute. I need that sign. Unmute. Tell me how you're feeling about inventory. Improving? Still shaky? No clue. Still a little shaky? Got it. We're good. So between shaky and good, that's a good direction. That's positive. None of us were born with this stuff. This is stuff that takes some practice. And you'll be ready for your quiz on Monday because you'll be practicing this weekend, I hope, or tonight, and you'll be understanding it even better. And we spent the week on inventory, and this is a place you want to be. Any questions you want to tag me with at this point? Okay. Then I will go ahead and we'll take a look at the next video, which is going to be the Excel stuff, vertical lookup, hiding columns, some neat stuff about that. So let's take a look at that now. And we'll go into portion of screen. We'll head over to our Excel and we'll get started. Excel tutorial. Take it away.
Hello, everybody, and welcome to Lesson 6 of the Ben and Boz Microsoft Excel video tutorial series. I'm Boz.
I'm Ben.
What's going on, man?
Hey, it's a beautiful day up here in Collegeville.
It is cranking out some videos.
Life's good. No place I'd rather be right now.
That's right. All right, well, the goals for this one, we're going to introduce them to a kind of a complex feature, the VLOOKUP feature. It's one of those I don't use a lot, but man, when I do, it is awesome. We're going to teach them some shortcuts as well, how to hide and unhide rows and columns, how to change font size and type and use a fill feature with the color, how to find some data, and then a very underrated feature that I love, the random number generator.
Yeah, it's a lot of goals today, but I like how VLOOKUP's number one. Every time I talk to employers, basically the number one Excel skill they say students should know is VLOOKUP. So it's just like a must-have for sure.
Gotcha.
Yeah, so specifically, we're gonna learn find with Control F, do a little bit of the searching with the VLOOKUPs, filling cells with the color. You can do that either with your mouse or with hotkeys. Changing the font type, doing a little bit more data validation, kind of building on what we did a couple lessons ago. Opening the Excel formula window, hiding columns and rows, and your favorite, picking a random number.
Just to edit on your thing, I think as far as tools, the VLOOKUP would be a huge one, right? I think the employers, as much as anything, they probably want a lot of the shortcuts too, right? Is it what you'd like the Control-C, Control-V, all that? They just expect that kind of stuff that you can fly around your keyboard.
Yeah, it's no longer setting yourself apart by being able to do that. It's the expectation that you have to do that.
Yeah, definitely. So, all right, well, if we go down, first of all, to our sample data here, we learned in a previous lesson that I will go ahead and I will use, I think I was off my data, but I will use the page down, so basically a control page down feature. And we have one kind of sample thing, and then we're going to look at something more accounting related. But what does this look like to you, Ben?
It looks like a list of states with their populations.
Do you have...
Wyoming.
Okay, Wyoming. So Ben,
What were you going to say?
I was about to ask you, what state do you want to know the population of it? Wyoming.
I wanted to pick something that wasn't visible here.
Nice, nice. Well, how we get there, if we want to do a search for it, now certainly we could use tools that we have that we've talked about so far. You know, we could use the control down arrow key. We could get to the bottom with Wyoming, right? We could see their population of 578 grand, and that certainly works. We only have the 50 states plus DC in here. But what if this was 10,000 rows and we wanted something that we didn't know where it was within there? What we would use in that situation would be the find feature. I love this one. I use this all the time in all Microsoft products, pretty much. This is great for Microsoft products. You just use Control F. You got to spell it right, correctly, right? So I got to type in Wyoming right there. I say spell it right. I mess it up. Wyoming. Go ahead and hit find next 578,000. Is there another one you want to know, Ben?
Yeah, would you go back to Control F, and this time before you hit enter,
Yeah.
so type in Minnesota, we'll
All
say
right.
this time.
Okay.
And then hit find all.
Find all. Okay, gotcha. I'll click on that.
And so if you had more than one, that would be all the times it said Minnesota would be listed. So sometimes that's useful if Minnesota was listed like 6 times or 7 times or something
Yeah.
like that. And so sometimes I'll hit find all, especially if I want to cycle through in a big
Yeah.
sheet. It's easier to keep track of what I've looked at. But most of the time, if it's quick, just hit enter and it'll take me right where I want to go.
Yep, so if you wanted to find all the north, so granted this is alphabetized, so you could just kind of look at them, but if we did the find all, now we see the 2, right? North Carolina and North Dakota. All right, now what could be neat here is, as opposed to always having to bounce around and find, the data, like what is my population for Wyoming or whatever, what could be nice is if all we had to do would be to type in a state's name and it would just show the population right next to it here. And in order to do this, we're going to queue it up with a data validation, but then we're going to use a VLOOKUP. All right, so for data validation, what I want to do here for the state is I want to just allow us to basically only select states that are listed here. So we want to spell them correctly. So I will go into data and then data validation.
We've done that before.
We're going to allow a list, and then our source is going to be our listing of states. So I'll go click on Alabama, I'll hit Control Shift down arrow key, and I've highlighted what I want. I'll go ahead and click OK. Now, when I have that one done, if I'm in this cell right here, I can just choose from one of the 50 states. when I go to population, this is what I want to be able to do is I want to be able to choose a state right here. You know, what's another state? You know, where would you live if you didn't live in Minnesota?
North Carolina.
North Carolina. So
Mountain country, not the
Not
coastal.
South Carolina?
Right, so North Carolina. Well, what we want to do is be able to choose it and have the population just come up here in cell E3. But we want the population to populate in this situation. All right. Now what I'm going to do is I'm going to do a VLOOKUP in order to get here. So to do a VLOOKUP, a lot of different ways you can get there. We'll show you a couple different ones. But if I do equals VL, and I'm going to make Ben happy here because he likes to do this one.
Yeah, you were saving so much time by not typing the letters. Just hit that tab key. Just boop.
Yep, so VLOOKUP, it's ready for me, and now it opens up, okay? What I will do with this one now is it's kind of like, okay, what is your lookup value? So I want to look up, and I'm clicking on North Carolina. That's what I want to look up. Now I hit a comma, and I can see it's giving me a little instructions here. It's like, what is the range that you want to look up in? So where I want to look up is I'm going to click on cell A2 there for Alabama, shift, right arrow key, and now I'll hold down my control, and I'll hit the down arrow key. So now it's highlighting all 50 states, plus DC, and the populations. Now I hit comma. What should I throw in there next for the last couple things here?
Number two,
Number two.
the
And why is it
column
number
index
two? What
number.
does that even mean?
So your table array, the previous one was in column A and B. And so column A, or the first one that you highlighted, is going to be 1, right? And the second one that you highlighted is going to be column 2. And so we want population. So looking at our data set there, we see population is in column 2. So we wanted to look up our value in A. And once it finds it in A, just go over to the side and return whatever is in column 2.
Yep, so that's your column index number is what we're popping in there. And then one final comma, and I've got two choices what I can put in here pretty much, right? And what are they, and what do you usually choose?
I always choose false in this
So do
case.
I.
So I want an exact match. You can do an approximate match where, maybe what you're looking up isn't exactly right, but it's pretty close. And you can mess with that a lot. We're not going to get into it right now. Typically, you just want to do false.
Drop for an exact match that way. So I'll go ahead and I will hit enter, and now you can see that it looked up North Carolina, the population of 10.4 million people. If I want to see that that's correct, I can go ahead and do my Control F for North Carolina, and I go down here, and there's the 10.4 million people. Is there another state, Ben, that you would like to look
If
up
I get
for?
kicked out of North Carolina and Minnesota, then probably I would have to say Wyoming.
Wyoming. So the two things you can do, you can still just type in Wyoming here. I'll get it off the caps lock, but you can type in Wyoming. And as long as you spell it right, it puts the population in there. If you spelled it wrong, Wyoming, whatever that says, Wyoming, it doesn't allow you to put it in there, but you can also certainly just go at it in the drop-down box and put in Wyoming, and it returns it that way.
Perfect.
So VLOOKUPs can be pretty cool, and that's just a simple way to kind of use them. Now, another thing that you could do, on this spreadsheet, we have a lot of data, and then we just have kind of a couple things that will change. When you want to pop stuff, Ben, how do you pop stuff?
Bold, italics, and most importantly, highlight. In this case, let's do a highlight because we already talked about bold and italics. So in order to do that, do you want to highlight the state and the population? Just the state? What are you feeling?
I mean, we can highlight them both. Those
All
are kind
right.
of two changes.
It's like
right?
the input cells a lot of times are going to be highlighted.
Yep.
And so what I would do, I got into using the shortcut for this. So I would hit Alt right now.
Okay.
And then I would hit H for home.
Yep.
And then I would hit H for highlight.
Yeah.
And then now you can go and click on whatever one you want to use.
Do you have a favorite color?
Yellow.
I usually highlight with yellow too.
It just pops so much.
It pops.
Yeah.
If it's not so dark, it doesn't hide the font. Either,
Exactly,
right?
and that is key when you use a highlight. You don't want to go too dark like purple or something like that, where you can't really even see the font, or some darker blues.
Yep.
So usually the light, bright colors like yellows are pretty good.
Yep, absolutely. As far as what else we talked about, we were going to teach them. Change the font type, size, color. So how would you get there, and what could we potentially do in this situation?
So as always, you can when you're changing font, size, type, whatever you want to do, you can use hotkeys, right? So you could do Alt H and then go from there. But typically, I don't do this very often, so I would just navigate to the top of your screen there, still in the home ribbon, and where it says Calibri. If you click that drop down, that'll change whatever font, whatever you want it to be.
You have millions of options.
Millions of options.
That's right.
If you want to change the size, where it says 11, you can change that to whatever you want it to be. I think we already talked about color. If you don't want to use the shortcut that we talked about, you can just click in that one. Remember, the A is for the actual font itself.
Yep.
The one next to it looks like a bucket of paint spilling over. That's for the highlighter.
Yep. So I changed it to blue font size, and then I, up to 18. It's in the Sabati font. So just some ways you can play around with it to help pop at the end.
That certainly pops.
All right. Now, if we go on and just using this a little bit more, okay, we're going to go on to my final. I'm going to go on to my final sheet here. I bumped a couple things. So on my final template, using accounting-wise this way. So what I have here, this is an inventory table. All right. We have a company that has 400 units. It looks like it was a period of inflation, probably unreasonably so. Just after every few days, the price went up
30% in like 3 weeks. That's pretty big.
Yeah, they should have purchased more right away. But an inventory table, so they have 400 units.
Hey,
They paid
Bitcoin.
$600 for it. And what we want to be able to do is enter in any amount of units that are sold, choose between our two most popular inventories, FIFO and LIFO, and have be returned to us the cost of goods sold and the inventory. All right. Well, Ben, out of these 400 units sold, how many do you think we should sell right away?
Well, I mean, sales were booming this semester, so I think this month. So I think we probably sold 372.
372. All right, we could put that in. So now for the inventory method, we're either going to use FIFO or LIFO. And I'm going to go ahead with the data validation here. I'm going to do data and go back to data validation.
But
Now,
wait a second, we don't have a list where we can just highlight those.
We could.
Don't we need that first?
What's that?
Don't we need that first?
Well, I didn't know where you're going. I do see it. You could go right from a list, or you could just manually type it in when you have a list. And if it's only, I would only do this if I just had a couple. Would be the only time that I would do this. So I can just do do FIFO and then comma and then put in LIFO. Do I need a space right there? I actually don't know.
I would put a space in there. I don't know. It would probably work, but
I think I do. I forgot that one. So FIFO, LIFO, I'll go ahead and I'll click OK. And now you can see that I've got my FIFO and my LIFO inventory methods.
oh, pretty cool.
Yeah, I can select them, but I could just type in here FIFO. It works. I'm not sure if you've ever heard of the FILO inventory method, which is not a method, so I mistyped it.
I think you're going to go to FIFA instead of FIFO.
FIFA, some soccer, that's right. So we have that in there, but now what are my COGS and my ending inventory? So what I'm going to do right now is I am just going to unhide some columns that I've hidden, and to unhide them, I didn't do that the way I wanted it. It worked, but I'm going to highlight. You can see I go from column D to E to R. I've got a bunch.
There's a couple missing letters between E and R there.
There are. I'm going to click unhide there, and what I've got, this is just all my computations behind the scenes that regardless of how many units are sold, it'll return for me under FIFO, what my basically what my COGS are, and it'll return to me under LIFO what my COGS are. So that's beyond where we need to get, but where we're going to look at it is we kind of create a summary over here that under FIFO, it gives me my COGS and my ending inventory. Under LIFO, it gives me my COGS and my ending inventory. So we can go back and we can do another VLOOKUP right here. Now, the other way that we can get actually to these formulas right here, we've showed it a variety of different ways, but we can do a Shift F3. I honestly don't use this one much.
I don't use it a ton, but it is another shortcut that you could definitely use if you wanted to.
Yep, I mean, it gives us right to VLOOKUP. Go ahead and click on it.
And just in case VLOOKUP wasn't showing up in that last screen, you just start typing it, and then it will pop up for you, so you can see it that way.
Yes, thank you for clarifying that. So Ben's basically saying, so Shift F3, where it says type a brief description. If I start typing in there VLOOKUP, it just so happened to be the first one because that's what we were doing beforehand, but it pops it open. Now, the one thing I wanted to show is it does kind of create in this VLOOKUP this time a little guide. Before we kind of talked each other through it, but so the lookup value, all right? So what do I want to look up here?
We want to look up cost of goods sold, so A4.
Okay,
would be our cell there.
Yep, so we're going to get to what I'm going to want to find cost of goods sold, all right? But I think what I want to do here is where I was going with this one is I want to look up the inventory value, all right? And then the table that I want to look up in this one right now is right here. All right, so I've got my FIFO and my LIFO. Whoops, I actually messed that one up. So my lookup value, I didn't click to the next.
It's a little different. We're used to typing it into the cell, and you hit the comma, and then you just move on and highlight the next piece here. But with this one, so you can click on FIFO there, the inventory method.
And I'm gonna click down here.
Then you click down to the next table array, and that'll pull in for you.
Let's see, I think if I'm highlighting the right stuff. Column index number, what do you think?
Number 2.
Number 2, and I can actually just tab between these and then go ahead and hit false. I can go ahead, OK, and now you can see that if I have FIFO selected, I automatically get the 4236. If I just change this to LIFO, my result automatically changes to the LIFO 4320.
Pretty slick.
So then what I wanted to do under ending inventory is just kind of repeat that, and we'll just go back. I'll do the equals VL. I'll do Ben's tab because it makes him happy.
Thank you. I appreciate that.
That's right. So now I want to look up, and there's going to be one change to this. All right, I want to look up the inventory method, and then my comma, I want to look up, what do I want to do with my range here? Before I basically had this right here. What do you think of that?
Well, that was good for cost of goods sold, but now we want to include ending inventory, so you have to extend the range one more to the right. So just drag it over to a slightly larger range there.
All right, so I've got that. Now I hit a comma. Do I hit 2 again? That's all we've done so far.
2 would be cost of goods sold, but you can see the third one that we had highlighted there was ending inventory. So column 1, FIFO, LIFO. Column 2 was the cost of goods sold amount. Column 3 is ending inventory. So let's use ending inventory for this one.
All right.
Lookup's good stuff.
False with the stuff we do because we want an exact match. Close off the parentheses, and now it gives us our ending inventory. And just to kind of demonstrate this, we could put any new units sold in here. We could put 10, and we would expect COGS to go way down and ending inventory to go way up. Right?
Hey, look at that. It worked.
So if I was to finalize this one, and frankly, if I wanted to when I talk about putting anything in here, we could even use one of my favorite tools, the random number generator. What you do with the random number generator, and this is frankly just a little bit of fun, but is I could type in...
A little bit more fun.
A little bit more fun. Type in equals rand between, and I'm going to do what Ben likes here, and when I get a little bit of the way in there, I'll just go down to rand between and then hit tab. Are you proud of me?
I am proud of you.
And what range do you think would be appropriate? What is the possible? We don't want to go below 0 or above 400. Do you want to fine-tune it even a little more?
I'm good with 0 and 400.
All right, so they can sell anywhere between 0 and 400 goods, and we put that in the parentheses. So now when I hit end, you can see that it just randomly selects a number, and it's just kind of fun.
234.
Yeah, I sometimes use that if I ever just need to do some test data and I want to eliminate any bias on that. And it is now doing 234 under LIFO. If I wanted to change that under FIFO, boom, I have that. And then how I'd really finalize this is, this right now, it would confuse people. All I really want to do is have people be able to choose the unit sold and the inventory method, and then give them back their cost of goods sold in their inventory. So what I would like to do would be actually to hide this data set here. So do you hide using the shortcut sometimes, Ben?
I don't usually use the shortcut, so if you wanted to, you could just click anywhere. All those cells will work. And say you want to hide the columns, you can just do a Control and 0 in that case. Control and 0.
So hide the columns you want to hide, Control 0.
And you wouldn't even have to highlight the whole columns. You could just pick one cell within a column, and it'll go away too.
So like to your point, if I wanted to highlight this column, I'm in the column. column, I just hit Control-0. Boom, the column's gone. I'm sad. What should I do?
Sad or happy. Why do Control-C if you're worried about
I was
it?
getting at with that one.
And if you want to do a row, you could also do that as well. And so to actually hide the row, it's going to be Control-9.
Yeah, and I don't know that I really want to hide, do I want to hide the rows? Or maybe I don't want all this stuff here. I just want the summary there, so I'll just put Control-9, and now you can see, and actually the random number generator changed whenever we do something, so that's why some of the numbers change. But now someone has it in a spreadsheet, and they're like, wow, all I got to do is put in any amount of units sold, and it's just going to continue to update my COGS and inventory for me.
That's pretty good. We're only at lesson 6. You can already create very functional spreadsheets for everybody.
Teaching them some more complex stuff. Well, I'll just control page up back to my main thing here. I think we used some finds and VLOOKUPs, and we did some fills and changed the cell. We did some data validation with the type list. We used the Shift F3. We hit a column in a row. We used a random number generator. We managed to do it all.
That was a pretty good lesson. Well done. Way to go, Boz.
Thanks, man. Appreciate it. And thanks, everyone, for tuning in to Lesson 6 of the Ben and Boz Microsoft Excel video tutorial.
So there we have it. There's our picture of Excel. There's some inventory analysis, that LIFO, FIFO stuff, and the vertical lookup, as well as hiding cells. In the chat, can you please type in, have you ever used hide or unhide in a spreadsheet? Just go ahead and type it in. And also, question number 2, have you ever used VLOOKUP? Put V if you've used VLOOKUP, or no if you haven't. Okay. Well, on that note, any more questions for today? Then I'm going to wish you a wonderful weekend. I will look forward to catching up with you Monday. Don't be surprised if you see a quiz on inventory on Monday. And we'll get you going. Make sure you have a good understanding. Be well, be safe. Look forward to seeing you again. Take care.